Welcome to the Swing Trading with Cycles channel. We're going to do an update on Dixie here. It's October 15th, Saturday night. We had our big CPI number. We had a big bearish candle, which didn't get any follow through the following day. So this is our daily chart for Dixie here. Thursday was our big bearish candle, which is the big range we need to get out of, or we'll see if we stay in it. That will tell us something too, right? So the high was 113.921. And the low was 112.156. So a pretty wide range for a currency. And so the expectation was we would fall below that 112.156, but we did not, right? We tested that low and then we sprung back up, right? But we didn't make a new high. And so we'll add the 10-period moving average if we want to think about the idea of cycles, right? This would be day 15, this low here. And it's totally possible that we got at our low there. You know, if we want to look back, this was actually a 15-day cycle, you know, something like that. And you could always quibble and like add this to that or whatever, but like this was a big decline below the 10-period moving average, and then we moved up, right? So these things always become much clearer in hindsight. And so totally possible that this is a new cycle. Also possible that this is actually still the continuation of an existing cycle. It's really about breaking this range. Again, basically almost 114 to 112, something like that. And we're obviously much closer to the higher end of the range. So if this isn't actually day 23, this would be day 1, 2, 3, 4, 5, 6, 7, 8. Again, we got to break above that 113.92. What is more clear is what's happening on the weekly level. So we had a high on week 17, and that still remains, right? So we had high on week 17. Week 18, we came down, almost touched the 10-week moving average, but not quite. And now we have a swing low off of that, right? This is week 19, giving us a swing low. But we're now pulling back a bit, which, you know, as we saw from that candle, it's really a consolidation. And so your question is, are we, like, either way, whether this is your ICH or we're moving into an ICH, we're getting close to an ICH. An ICH, again, I'll just assume you've seen the content for the cycles analysis. Definitely take a look at the links in the description. But the idea is that we're getting close to a weekly cycle low. Unless this was your weekly cycle low, but even if that's the case, this still is starting to get long in the tooth, right? At some point, we're going to pull back. This is your 200-week moving average again. That's coming into play for many assets. In this case, we're on the upswing, right? We're just now starting to like whoop, right? But at some point, right, this thing is going to keep rising, and this thing maybe starts to consolidate, and then we're going to get to a point where it's going to catch up, and it's probably going to fall below it, the same way that most assets are starting to test it right now. And if we look at the monthly chart, I mean, my God, look at this bullishness. We had this one little aberration, May 2022, a red month, but then just green months the whole way. Again, at some point, this thing is going to pull back. It'll be a great trade if you're willing to go short or a corollary trade on other things. But right now, this thing is showing bullish posture, right? And so if we think about the correlates of the dollar index, let's take a look at TLT. My God, this is TLT. So what appears to be month 19 of a longer term cycle after a top on month 9. I mean, look at this choppy, ugly little rally, and then this incredibly precipitous decline. This is a little consolidation. You can see we consolidated almost between like 120 and 110, like a 10% consolidation. Massive volatility. I mean, this is a bond index, and then we broke down. And so you imagine, at some point, we're going to retest this area from the bottom, right? From the downside. It's a question, do we break above the 110 area or do we not, right? And it's possible we don't even get back up there. But at week 19, you would expect there's going to be a bounce at some point. I mean, we've swept all of these lows. The next area we're really, like, yeah, it's like the 80, you know, the high to mid 80s, essentially. So maybe we get a bounce before that, and that sets us up for that move lower into that, is what you would kind of expect in my case. So that's the move I think that's a good way to kind of think about it. Let's look at the weekly, I guess, for TLT just to kind of close the loop there. So we had a little 7-week rally and then a precipitous decline into a week 31 low. And now we have a 7-week rally and a precipitous decline, and we're on week 17. Doesn't mean this 17-week decline has to turn into a 30-week decline, or excuse me, a 31-week decline like this one. But maybe it does. Maybe it's not 31 weeks and it's just 20. It's bad news bears, right? The point is respect risk, understand where, how, and when you can mitigate risk, and not try to get in front of a buzzsaw. So I'd stay away from this. And speaking of the 200-week moving average, my God, look how far below this thing we are. We came back up here and didn't even get anywhere near sort of testing it. Yikes. Not a good look. And so definitely make sure that you subscribe if you haven't already. Hit the notifications button because you want to make sure you get those timely videos as they come up. We're in a tumultuous period here, and at some point we're going to get that violent reversal that's going to really give up, like, just once in a lifetime opportunities to some degree. Like, look at how far below. This is the 200-week moving average. Just look how far below that we are for the TLT, which is just a massive index that's tracking just a group of assets that's just very, very regularly traded amongst large money institutions. So at some point, things are gonna break to the upside, and you want to be ready for that.